Mixed markets Wednesday, the NASDAQ trading lower even though Coinbase had a pop on its debut. Let's talk more about that cryptocurrency exchange's prospects and the bank earnings that came out today with Ross Gerber of Gerber Kawasaki. Good afternoon. Welcome back, Ross. So the biggest, good to have you back. The biggest cryptocurrency exchange has debuted this afternoon at worth $100 billion now. Do you see this as the watershed moment that it's been hyped up to be?
Yeah, I do. I think this is a huge moment in financial history. It's the first time we've seen an exchange and a decentralized monetary system that has really been a threat to the current monetary systems for its entire existence, now becoming legitimized as a New York Stock Exchange listed company worth over $100 billion. And I think a new era has begun for what we would like to call decentralized finance or cryptocurrencies. Even the listing of tokens now of actual stocks is happening on the Binance exchange. And you know, when you see how these networks work and how sophisticated these companies are, it kind of makes the JP Morgans of the world look like dinosaurs.
We'll talk about JP Morgan in a second. Now, you've taken advantage of this decentralization. You buy Bitcoin on behalf of your clients. Would you recommend Coinbase to your clients?
We're not recommending Coinbase at this time because, you know, as I say constantly, the best way for people to participate in the crypto world is by buying Bitcoin and holding it themselves, not buying it through Robinhood, buying Bitcoin through an exchange or process like Square has with the Cash App, owning the Bitcoin yourself and holding it for the long term. There's a lot of risk in cryptocurrencies that people haven't really put their arms around. And when you invest in a company like Coinbase, for example, you're taking all the risks that are involved with crypto in one investment. But if I own the actual underlying investment, which is Bitcoin, I actually have a utility of owning these coins that makes it safer than, per se, investing in a company like Coinbase, where so many things can happen from a regulatory perspective, from a commission. You know, they make all their money on very high commissions right now from the retail customers. And firms like ours that are partnered with Gemini are able to trade at a fraction of the cost that Coinbase people are paying for the same exact transactions. So we see price compression and commissions and many other factors, including regulatory, that could be a risk to Coinbase, where if I just own the Bitcoin, I get all the upside of Bitcoin and none of these risks.
Things that we saw happen in the securities industry. Now, since you mentioned JP Morgan earlier, we had blowout earnings from banks, JP Morgan among them, with profits nearly quintupling. Got Wells Fargo and Goldman Sachs also with blowout numbers. We've already seen a big appreciation in bank stocks. Is there more room to run?
Yes and no. I mean, banks right now are really a interest rate play more than a fundamental business play. I think banks are going to be massively disruptive by the Coinbases of the world, by all these fintech companies, PayPal and Square in particular. Young people today will not be banking in traditional banking structures, just like they don't watch cable television or go to the malls or go to auto dealerships. Banks are essentially a part of that. So for long-term investors, I would stay away from traditional banks. I think they're dying birds. They're horribly managed. They're bad businesses, and people are looking elsewhere to do their banking. And we're going to see people banking with some very interesting people in the next 5 or 10 years, and many players that you probably haven't even heard of yet, you know?
All right. Now, another theme in the market today, the reopening stocks, the reflationary stocks in the vanguard. In your perch in California, any particular ones that you like right now that investors should bet on?
Well, we're heavily invested in Las Vegas right now, in the MGM hotels, as well as in the cannabis dispensary Planet 13 that's also in Las Vegas. The demand for going out and having fun has never been higher in my life. And, you know, there's so much pent up energy to have a good time, but yet doing that isn't that easy, especially if you're trying to travel to Hawaii or you're trying to go places. It's a nightmare. I do not recommend trying to go to Hawaii right now. Everybody's there. Everything's overpriced, but I can just flip over to Vegas, drive there, or a short flight, have a great weekend. Things are opening up, and between sports and entertainment and gambling, and now also with the online gambling ability of these casinos, we're very bullish on the casino industry. Also, Penn Gaming has exposure to the casino business right now. All these local casinos we expect to be packed. And then with that, with Disneyland. So Disneyland's opening in a few weeks, and it's literally like the most anticipated event in Southern California right now. People are dying to get back to Disneyland. It's never been shut for this long in history. So we expect Disney to see and the theaters reopening to really benefit Disney now that they've built their Disney Plus business, but now they're going to get back this other business. And what they're going to see is record numbers of spending in the parks, around the parks, merchandise. The theaters are actually going to do very well, we think, too. And that will be a big boost to actually Disney's bottom line. So the real question is, with all these reopening places, what is their cost of operation because of COVID, offset by the efficiencies they've put into their businesses with technology? And what we think is that they're all going to be net winners because of the efficiency of technology, like we were talking about, the efficiency of Zoom for businesses like ours. But when you think about the efficiency of cell phones and contactless check-ins and all these things hotels and theme parks are now doing to make the businesses leaner, we expect them to be more profitable on the other end. And I think that's why the markets are valuing them so high.
So possibly some blowout numbers, but we'll keep an eye on the costs.
Blowout numbers for at least a year or two.
All right. Thank you, Ross, for your thoughts, everything from Coinbase to Bitcoin to Disney. Our thanks to Ross Gerber of Gerber Kawasaki. I'm Fred Katayama in New York. This is Reuters.